I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon, everyone. This is your Editor-in-Chief, John Darsie, here to bring you the daily recap. So we had another sort of quiet day in the market. We gapped down this morning after news of a not-so-successful Italian debt auction. Demand was a little light for that Italian debt, which sort of started to trigger some of those emotions and anxiety that we felt about the European debt crisis that have been a little bit out of focus over the last several months as the markets rallied to all-time highs in the Dow and close to all-time highs in the S&P. Along with the Cyprus situation, it's just sort of a reminder that this European crisis hasn't gone anywhere. It's still there, and if we do start to see a little bit more focus come into some of these debt auctions, and we start to get some weak demand at some of these debt auctions, it could be something to keep an eye on, to see how it affects various sectors and see how it affects the broader market. But today, given the light action that we have and the light volume that we have based on the holiday, the Passover holiday, the upcoming Easter holiday, and then you have spring break. If you go out on the trading floor right now, you'll see, sort of what you're seeing in the market is that it's very sparse. You're seeing there's not a lot of traders on the trading floor, and there's not a lot of follow through in stocks, and you can't really hang your hat on any of the action that's happening. It's very stock specific, very spotty. If you are able to find a stock that's moving and is volatile, I would stick with that, but maintain a narrow focus as the indices are fairly quiet. I don't think you'll get a lot of follow through in either direction right now, is the trend that we've been seeing. Talking about stock-specific action, there were a few moves today that were noteworthy. If you were able to pick your spots and identify that volatility in some of the setups that were out there. Facebook is one that has been very weak. It hasn't triggered out of that macro cup and handle pattern that Scott talked about or that Kramer talked about Scott's analysis on his Mad Money program. But if we go to the chart of Facebook, you can see today it did start to show some signs of life with a nice calculated red dog reversal setup. With the red dog reversal, what we like to see is a stock that is in a downtrend, or you can play it reverse in an uptrend. A stock that's in a downtrend and is sold off several days in a row, and then you see a trade below the previous day's low and then a reversal back above it. And the strategy, it's a calculated strategy. We don't, catch falling knives and try to pick bottoms. Is your entry is on a break back above the previous day's low. So your entry in this case would have been 25.03, and you put your stops at the low of today's candle, which in this case was 24.72. So you get a nice calculated setup there, and you see what it leads to. Potentially it's a day trade, but then you can also turn it into a swing trade based on how the stock acts. And Facebook acted really well today, climbed back above its 8-day moving average here. So this is very positive action for Facebook after a rough stretch. And Facebook has this long-term problem with commitment to rallies. The IPO was obviously well publicized. It was very unsuccessful. There's too many shares in the float. It was overpriced. The stock got cut in half down to the $19 level at one point. And in general, it's hard to see Facebook get follow through. It struggles sometimes after a run up to base and push higher. And that's something that Scott has been looking for on a swing basis, but it's been hard for Facebook to get any of that type of follow through, like I mentioned. And me personally, I'm sort of torn on the long-term prospects for Facebook, the company and the stock. Obviously, they're intertwined, but Facebook is pushing more and more ads into your timeline, I think it's starting to turn a lot of people off with some of the salesy advertising approach you're seeing. And I'm not sure how much that business model is taking hold for Facebook anyways. A company like LinkedIn has a very defined business model and a very defined target audience that they pitch all their premium products to, and you've seen obviously the stock act in kind for that. So personally, this is not one that I would put in the drawer and look away, but if you're trading, I think Facebook will continue to provide volatility as they try to work through all their issues and their business model and stuff like that. The healthcare sector performed well today, in particular UNH, which is not a stock that we've really looked at. I'm going to zoom out to a longer time frame to look at UNH. Well, first we'll look at today's daily bar, an impressive move. It was up almost 2%, even though it closed off the highs. And you have a little wedge pattern here in UNH that looks like it's getting resolved. A small wedge pattern here. I'm not going to draw the lines, but if we zoom out, we can see sort of a longer term base, a little bit of a wedge that UNH looks like it could be trying to break out of with today's impressive move. And we'll draw, we'll go out to a weekly chart to look at this, probably be a little easier for us. There we go, you can see it nice there. We'll take a look, we'll draw our lines and then we'll zoom back in. Nice little wedge pattern here in UNH. The healthcare sector has been one that's been performing really well. Traders like to see a tape, momentum traders, short-term traders like to see a tape where tech stocks lead and high volatility, high momentum stocks lead, but you got to trade the tape that's there, and that's not the tape right now. So you look at a stock like UNH in the healthcare sector, and it looks like this could be setting up for a nice pattern for a breakout. So if this is your cup of tea and you like to look at stocks like this, I think the healthcare sector and UNH in particular provide a really nice setup and really nice risk reward at this level for you. Another one that's interesting is Monsanto today. Another one that's sort of been off our radar. That's a look at the weekly chart. We'll go back to the daily to look at Monsanto. And this agricultural name has acted a lot better than other ag names in the space. We'll take a peek at a chart like CF. It's had a big sell-off since topping out here above $230, and it looked like it maybe put in a bottom here, but it's faded all the way back into that 190 level. You look at Mosaic, which is one of Scott's 2013 predictions. It's also a little bit lethargic. It's still above its 200-day, but not acting as well. And Monsanto is slightly different than those two companies in the agricultural space, and it's acted a lot better. And with two really strong days, the last 2 days, it's breaking above this pivot. It might need some rest. It would be hard to buy Monsanto after these two very strong up days, but if we do get some rest above that pivot breakout, zooming out to the weekly chart here, you see a nice little upper level base that it's breaking out of, and I think you could see some more bullish price action in Monsanto. Something definitely to keep an eye on. We'll take a peek at Goldman Sachs. It wasn't terribly lively today. We'll go back to the daily chart again. It was announced today that Warren Buffett is buying warrants in Goldman Sachs, which all in all is a great thing to see. It's great to see a name like Warren Buffett come in and support a stock even after a strong run-up like you've seen in Goldman Sachs, and to have show his desire to own in a different type of form Goldman Sachs stock. He always manages to get a little better deal, but Goldman Sachs showed a little bit of strength today as it teeters on this upper level pivot support area. It traded back up into its 8-day moving average. It's something to keep an eye on whether or not Goldman Sachs gets rejected at that level or how it follows through in the next few sessions, but something to keep an eye on. Is that a complexion change for Goldman? I don't know. Something like I was talking about in the opening about more of a focus on the European debt crisis and with the Cyprus situation, with the poor Italian debt auction. Goldman is one of the banks that has is most sensitive to the European debt crisis. So if we do continue to see that creep back into the headlines and some more instability return to the Eurozone, the Euro currency, you could see Goldman Sachs come under some pressure because of that. And this upper level pivot support area is going to be the really important level to watch around 145. But in my opinion, I think we could get some more downside in the financials after a strong run. We'll see how deep that correction goes, but I think again, there's not a lot of compelling setups out there right now, but a lot of things just to keep an eye on and make sure you write down all these things that are going to be important to watch for market composure and potential setups going forward, as things are probably going to remain quiet through the end of the first quarter, which is tomorrow is the last day of the first quarter, so it's not a terribly bold statement by me. We'll take a look at a couple setups I talked about yesterday, in the daily recap, upper level setups that I think compelling setups right now are a little bit hard to come by, hard to find, and traders who are out there over trading I think are getting frustrated because you're not seeing any follow through. And OpenTable is a good example of a lack of follow through because yesterday it looked like the stock was ready to go, broke above this pivot, and then crapped all the way back down, just about to where it opened. That's not the action you like to see. It's sort of a thin stock, so as volume is light, you can see those type of moves in OpenTable. And today it traded lower and was able to bounce, so it's basically just still stuck in this range. It probably needs more time before a potential breakout, but I think this is an interesting little pattern. You got sort of a little rounded bottom here on this upper level flag or handle, whatever you want to call it, and that's one to keep an eye on. Mercado Libre, the Latin American eBay, is one I also talked about yesterday in the daily recap. Sorry if I'm getting repetitive, but this is another one with a great upper level flag, good price action in the last 2 days. It looks even a lot better than OpenTable, and it looks like it wants to break above this upper level consolidation. And we love to see these tight upper level bases to base our trades off of from a risk reward perspective, because you can base your stop loss at the bottom end of that range, and you can play a trigger breakout, and you can even start to get into a tier 1 feeler type position when you see nice price action and the fact that the stock's above all of its moving averages. Another, it's not a red flag, I wouldn't say, but something you don't like to see from a momentum perspective is momentum stocks have a lack of follow through at upper levels. And how can you really blame Netflix, though, after basically doubling in price since its earnings report? But today, after some strength yesterday to push it back above its 8 and 21-day moving averages, you saw Netflix look like it wanted to go and break out again to new highs, but it also traded well off its highs and closed basically back where it opened. Just something to take note of, see where it leads to. But like I said, not a huge red flag or a huge problem for Netflix. I mean, look at this. It's a monster move since earnings. Very impressive. Another one that I talked about a little bit different yesterday in the daily recap as a possible short setup is that, this market has been back and forth. Vicky wrote on Off the Charts, it's been like a frog in a blender where you got things flying around everywhere. And I don't know the origin of that saying, but I looked it up and it made sense at the time. But the market's just been back and forth, one green day, one red day. So it's always important to have both long and short setups in your back pocket, depending on the type of price action you see. And potentially you could play the opposite ends of each range, looking for range constriction, but not looking for breakouts to the upside or downside. But Expedia was one that had been weakening and had put in a nice, looks like about a 5-day base. If we go back to the chart recently, to like we talked about in the upper level bases in a stock like Melly, you see a nice base to base your potential short off of in Expedia. And if you weren't short going overnight yesterday, it was a little bit tough this morning, but the stock did break out of this mini ascending channel, and I think it's one that could weaken further. It's lost support of its 50-day, 21-day, and 8-day moving average. They're all curling down. It lost its upper level support level. And I think the next real level to watch, it would be a nice percentage move if it can get down there for us, but down in this area, which is about the $57, $58 range, I think is a support level. If we do get more weakness in Expedia, then I think the stock could test that level based on some of the relative weakness that it's shown of late. And the last thing I'm going to talk about is the mortgage servicers. There's nothing terribly compelling at this stage, but guys have been talking about it in the virtual trading floor. This is a sector that we talked about in the morning call. We started talking about a few months ago as one that's, from a fundamental story. It's these stocks are growing tremendously due to the fact there's new capital requirements from the Fed on big banks, and these big banks are having to basically dump their mortgage servicing portfolios onto these mortgage servicing companies. And OCN is the biggest of the mortgage servicers. And it looked like it was almost left for dead here after, sort of putting in a double top here around the 42 area. Harsh sell-off. It accelerated here, broke below this little pivot support area. We've seen a really impressive bounce. It started, on March 22nd, and then on Monday, it was off to the races in terms of a bounce for OCN. Very impressive move back above the 8-day moving average, and it's one of those that's probably hard to buy right here, but maybe with some basing action, some settling out with OCN, maybe you could look for a buying opportunity out of a flag if it develops up back towards upper levels, back to near highs for this stock. NSM Nation Star basically got a lot of Bank of America's mortgage loan servicing portfolio. Another one I like, OCN and NSM are my favorite two in the group, the biggest and most mature. But it hasn't had quite as ferocious a bounce as OCN, but it also wasn't as beaten down as OCN. And I even almost like Nation Star a little bit better at this point. It's back above its 8-day, 21-day, setting its sights on getting back above the 50-day. But same thing as NSM or as OCN. Look for maybe a little base, a little consolidation after this impressive bounce. See if it can hold higher, and then we'll look for potential follow through to the upside in these stocks. I talked today a lot about things to keep an eye on. There's not a lot of cut and dry patterns at this point. Very clear bullish patterns, very clear bearish patterns. There's a handful, like I went over, but there's a lot of things right now just to watch. And as a trader, I think patience and discipline and the ability to sit on your hands is actually a skill. And it's a huge asset, and it's something that's, a lot of traders I think have ADD, and they always feel like they have to be doing something, or else, they're doing themselves a disservice, and they're not taking advantage of all this knowledge and all this trading skill they have. But I think a lot of times the best approach is, don't churn yourself, don't get frustrated, sit on your hands, wait for things to create a little bit more calculated setups. We talked about it many times over the last week or so that we have Passover, we have Easter, we have spring break, we have the end of the quarter coming up. I think people are just collectively taking a deep breath, and after a huge run up to all-time highs in the indices, and I would say take it easy tomorrow. I don't think we'll see that much action, and wait for things to get a little bit more calculated for us. And we'll definitely be sure to let you know when that happens on Off the Charts, on the morning call, and all over the website. But thank you for joining me for the daily recap. I will be doing the morning call tomorrow with Brittany. Should be a nice show, a little change of pace from what Scott and Brittany normally talk about. But if you're interested in listening to me talk, maybe you're not after I just talked a long time on this daily recap, join me tomorrow for the morning call. See you there.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.